Good afternoon, and welcome to Georgia United Credit Union's Financial Fitness Bootcamp. My name is Ken Shanowski. I work in business development here at Georgia United, and we have a great opportunity for you for the next hour to discuss financial fitness. Financial wellness and financial literacy are an everyday life skill. We use it every day of our life as we check our phones, our tablets, our computers, and make sure that we're doing the right things to try and put ourselves into a better place financially. So as we start off today, just a few housekeeping issues. Please keep yourselves muted. We also suggest that you turn your cameras off so that the added bandwidth at home or wherever you're at is not going to kick you out through your internet provider. Steve Overcash, another person in our business development office, is here. He's monitoring the chat, and questions that we do not get to, he will try and answer in the chat as well. One thing we wanted to bring up before we introduce our lead presenters today, many of you, as you submitted your questions, talked about investing and things that you can do to help put yourself in a better place for retirement. And while we would like to speak to this, we are not professionally licensed in this chat to discuss those things. I will, however, point to you on our website, gucu.org, under the tab Invest. We have two individuals who previously presented, Kathy Genty and John Masenko, who will answer any of your questions and can set up a free consultation to go over where you're presently at and help you strategize onto what your future goals may be. That being said, I'd like to introduce to you first Lee Gant and then Harrison Stafford. Lee, why don't you tell everybody a little bit about yourself?
Sure. Good afternoon. My name is Lee Gant. I have been with Georgia United Credit Union for 16 years. I have 30 years in banking. I work in the business development department in the Gwinnett community, Rockdale County community, and the Archdiocese of Atlanta.
Awesome. Yeah, so my name is Harrison Stafford, and I am basically responsible for the northern part of Georgia, so from Paulding County to Catoosa County. So Paulding basically to the line of Tennessee is kind of where I float around. I don't quite have 16 years yet. I've been in the field for about 4 years. And yeah, I just want to go ahead and thank everybody for submitting the questions and for tuning in today. It's going to be great, and we really, really appreciate your time.
Absolutely. Well, thank you both, Lee and Harrison. So let's dive right in. Let's talk about debt. Okay. What are some signs, perhaps, for the people at home? Lee, why don't you start us off? What are some signs that maybe you have too much debt?
Sure. Some of the signs that you may have too much debt are when the bills come due and you don't exactly know where you're going to get the money. We recommend that you identify how you're going to pay your bills before that they come due. Another is if you're getting calls from collectors, that could be a sign. And another thing to be careful about is if you're not being honest about what you spent with your loved ones or your family, you're avoiding the topic, that might be a little warning sign to you that you have too much debt.
Yeah, or even it could be something as simple as only making your minimum payments. Again, you're still making the payment. That's not a bad thing, right? But if you're only able to, in a position financially to where you can make that minimum payment, that's typically a good indicator as well.
Well, and that's good to know. I know for some of us out there, perhaps we've overspent a little bit on national championship gear recently, or perhaps Atlanta Braves World Series memorabilia. So it's always important to be aware of what you've been spending and keep track of that as well. So let's talk about how do we get out of debt? What are some of the best practices to get out of debt? Lee?
This is a great time of year to work on getting out of debt. As we say, Financial Fitness Bootcamp, it's a new year, new you. So you might want to take a look at your debts, and there's two different methods that we can talk about as far as getting that debt paid off. One is the avalanche method. That's where you line up all the things that you pay bills, and you pay off the ones with the highest interest rates first. So that saves you interest. So you start with them, knock them out, and then move down. While you're paying that one off, you might consider paying the minimums on the other because you're knocking out that highest interest rate debt first. With the snowball method, some people find it satisfying to get rid of a debt once and for all. So with snowball, you'll line up your debt in the amount of debt it is and pay off the smallest ones first. Just knock them out. For some people, that works better, and then you move on to the bigger balances. So you're reducing your debt a little bit at a time and working your way up.
So you mentioned championship gear, so I'm going to go ahead and just throw this out there. Go Dogs! But there's a couple other things too. You know, we're talking about debt, and being in debt is a bad thing. Debt in itself, not necessarily a bad thing, right? Because it allows you to purchase things that you would have normally not been able to afford. You know, so you think of big purchases like a home, or it could be, you know, any type of addition to your home or an automobile. You know, most people don't have $20,000 to $200,000 in cash or just something sitting in a bank account somewhere. So it allows you to have that purchasing power and then pay it off in more reasonable or you know, feasible payments. But those are great things that Lee just mentioned to be able to pay off debt. But it is worth noting that it's not the only two true and tried ways to pay off debt, right? Every situation is different. Everyone's circumstances and walk of lives are different. And so what works for me doesn't always work for you. And the same could be said the other way around. So,
Absolutely. It's important to understand that every situation is different. And as well, you can utilize the free financial wellness advice of a Georgia United professional by making an appointment with someone in the branch and come in and they'll go over your credit report with you, your debt, and talk about opportunities to help pay down your debt free of charge. It doesn't cost anything. It's just us helping you, which is what we're all about.
and I'm glad that you brought that up too, really quick too, because that's a resource that a lot of people don't know about. You know, the first place that you really should go to is the place that you have your financial relationship with. And it's free. It doesn't cost you a dime. We don't charge you a penny to go through your finances, whether it is at the branch or contacting the two of us. And that's something that we do a lot of. And it really, knowing what you owe is a big part of that. So again, I just wanted to kind of go on top of what you just said there.
Absolutely. And so, you know, part of the debt nexus is the fact that in order to get in debt, perhaps credit has been extended to you. And before we talk a little bit about credit, it's important for us to remember that what is credit? I often liken credit to being a parent. Credit is trust. Credit is the extension of financial opportunities to you to either purchase things, a car, or mortgage, or through a credit card, and the financial institution is trusting you to pay it back. It's like being a parent. You trust your children to do the right thing. But what happens if your children do something that you don't like? Well, you ground them. You'd make them turn in their phone, put it on the kitchen table. Perhaps they have to be home by certain times at night. Well, that's what happens with credit. As you pay things back, your trust grows. But if you start to do the wrong things and you acquire too much credit, your credit score starts dropping as a matter of the trust of whether or not you can pay back your limits. So Lee, let me start with you on talking about credit. What is your credit score and why is it so important?
Great question. Your credit score, first of all, there's 3 credit bureaus, Equifax, TransUnion, and Experian. And your credit score is a snapshot in time of what your current financial situation is. What you need to know is most people do risk-based lending. So that means the better the score, the better the rate. So the higher the score, the lower rate that you're going to get on a piece of credit when you're using it to buy something. The credit can impact you in many ways. First thing that I recommend that people do, especially at this time of year when the year's starting, is get a copy of your credit report. Make sure that that's actually your debts that are on it. And you can get 2 per year from annualcreditreport.com. Not free credit report with funny jingle, but the annualcreditreport.com, you can get 2 free per year from each of the agencies, and then you can check it for accuracy. And then as far as your score goes, it's made up of a number of components. First and foremost is 30% of it is how you pay back your bills. Are you paying them on time? So that's something that you can control. Of course, in the past, if you didn't do it, you can start doing it now. Pay your bills on time. Then the next largest piece of your credit score is something else that you can control. It's the utilization of your revolving credit. So if you've got credit cards, you've heard of people say they're maxed out. Well, the closer you get to that credit limit, the balance reaching the limit, that makes your score go down because you're lacking capacity. You're at 100% utilization. So if you could bring that down to 25%, maybe 30% of the overall credit limit, your score goes up the following month when they report because your utilization has left you more capacity. You're using less of the credit limit and you have more capacity. There's a couple of other things like the mix of credit, which is whether you have a lot of installment or revolving or a mix of both. And then again, how long you've had your credit history. I think that pretty much covers each of them.
Yeah, and just to kind of hit the spark notes on really what you just said there, and Ken had a great example with the parent and child dynamic. But it's your likelihood. The score just represents the likelihood that you are to pay that bill, right? And so the higher the score, the more likely person X is to lend to person Y, okay? And at a more favorable rate. And just what you just said, 35% payment history, 30% utilization, 15% length of credit history, 10% new credit, and then 10% the types of credit mix. So if you're taking notes at home, hopefully we've got all those written down there.
And as Ken mentioned before, when we open an account, we will pull credit. That's for the Patriot Act. But while we've got that credit report there, we can really coach you. And so many people, they're embarrassed to ask for help. But remember, the credit union, we are not for profit financial cooperative. We are in the business of helping people. You're our members. You own the credit union. So while we've got that credit report there, we've seen everything. Some people have experienced the loss of a job or a divorce or medical issues that has made their credit score go down. And so we want to coach you on the areas that you can improve your credit at that time.
Well, absolutely, and that's great advice. And it's free advice, and that's the wonderful thing about Georgia United Credit Union. You mentioned briefly about credit scores, and one of the things I often get and hear in the field is, there are a couple companies out there. One is called Credit Karma, the other is called Savvy Money, who basically report a credit score for free to you. Lee, start us off. How do you feel about those? Businesses that are out there, are they reliable? What do you tell people you come into contact with?
Well, there are companies that give you the opportunity to see your score, but the score that consumer sees may not be the same score that we see. When it comes down to it, they'll use a different algorithm. But one of the best things about keeping up with your credit score is to look for trends. Are you going up? Are you going down? Like I said, what the consumer gets is sometimes up to 40 points higher than what we might see when we're pulling a hard pull, but it can be helpful and useful because you want to move it in the right direction.
And so that's a great point that you just brought out. I'll talk specifically about Credit Karma because that's the one that I see most often. I think it's a fantastic app. This isn't by no means endorsed by Credit Karma, and I do not work for Credit Karma, but I think it's a great app to see just what you just said, a snapshot, right? And so that number that it gives you, I believe it gives you your FICO score, isn't 100% exactly what you're going to see whenever you say go apply for an auto loan, but it is a pretty good indicator. And exactly what you said, you're able to see that trend. So, you get notifications, once a month or whenever that activity happens, like, oh, your credit score's gone up 7 points, or, oh, if you just applied for a loan, it'll hit you with a little ding and say, hey, so-and-so pulled your credit, here's what it's doing. It'll also show what credit lines you have. So if you have a mortgage, it'll show that. If you have, credit card, debt, it'll show that. If you have an auto loan, it'll show that. And it'll also recommend products that they think that fits you where you're at in life too. So it's really nice to kind of hit those high points, but it's exactly what you just said. It's a good snapshot to keep moving forward and see where you're at.
You can use those scores to set timing. For instance, if your score is at a certain number, and you might end up paying higher on an auto loan, you might want to wait till you can pay down some of that debt and get a little higher, and then apply for that auto loan, because the difference in the interest rate over the course of, say, 5 years can be significant.
Well, that's great advice. And that's one of the things we see a lot here at Georgia United with people bringing car loans for refinancing, mortgages for refinancing, is they've identified points for improvement and then receive the benefits of a much better rate through Georgia United. One thing I wanted to mention before we move on to budgeting is we have friends, and our friends mean very well, and they give us advice. One of the things I often hear, and maybe Lee, you can start to speak to this, is I heard from my friend that I should always carry a balance on my credit card. That helps my credit score. Does it help your credit score to carry balances?
Well, the good thing about your credit score, it's a snapshot. So you're going to average out there. Sometimes you might have a zero balance, sometimes you might have a balance. Really, you don't have to carry big balances. It doesn't necessarily help you. So I always say when you're starting out with credit, for instance, use a Visa to pay for gas. Gas is something that we all need. We don't necessarily always have the money. It might be the day before payday. So, you take a credit card, buy your gas, pay it back, buy your gas, pay it back. As you do that, you're building credit. And the chances are when we take that snapshot, it's going to be a good picture or a normal picture of what your expenditures look like.
I don't think I have anything else to add to that. That's good.
Yeah, that's building that trust because you're using it and paying it off right away. So that's fantastic. Okay, so let's move on to budgeting. A budget is one of the most important things you can have when trying to get in a better place financially. I know personally, I had someone reach out to me within the last couple of weeks who's in a very good point in their life where family, home, children, whatever, but they had never made a budget. So where do people start making budgets?
Yeah, so I think the first logical place to start really is knowing what you owe, right? That's the most important thing. How much you bring in and how much you have to pay, right? Because that's what we see a lot of times. I see it a lot with people who don't have a budget, or maybe they've just finished school and they've just got a new job and they're making more money than they've ever made in their life. Like, man, I can afford this nice house. I can get a new car. I can do this. And on paper, the math makes sense, right? They can afford it. But then after they have all those debt obligations and they have everything paid for, they can't afford to go out to the movies. They can't afford to do any other leisure thing that they do because they knew what they had to pay and they knew what everything would cost, but they have no extra room for an emergency fund or anything, which we'll talk about here in a little bit. But again, knowing what you owe is where I would start first of all.
Absolutely. There are so many things in life that we can't control, but one thing that we are responsible for is making decisions about our money. Whether it's a lot or a little, those are our decisions to make. So knowing what you owe is a big help. The word budget often gives us the fight or flight reflex, even those of us in the industry. But it's really just a simple exercise of putting it down on paper or in front of you. Know what those bills are. Some bills are the same every month, so you can really count on them. Some of them fluctuate. So if you do have a situation where money is tight, those things that fluctuate might be where you can cut back on some things. But budgeting is actually something you're doing to take care of yourself because you are in control.
And I think, too, it helps identify spending leaks as well. And we could talk all day about that, but I'll give an example. If I go to Chick-fil-A, 3 times a week, you do that over the course of a year, it's a little over $1,000 or $8 a day, it's a little over $1,000 at the end of the year. So you get, whenever we talked about the saving discussion here in a little bit, you're like, well, I can't afford to do anything, or I can't afford to set aside money. Well, if you look at your budget, you see how much money you're spending on these different, fast food, or maybe it's entertainment. Again, everybody's different, but it really paints the picture because you can see, oh, it's a lot more than I thought, or maybe this is more realistic that if I can cut back on here, then I can afford to do other things.
When you're doing your budget, you're planning ahead. You know when your money comes in, so you need to know which bill you're going to pay and know that in advance. And then you might be someone like me. I would rather pack my lunch every day and have one nice $100 dinner out once a month. But you have to plan ahead in order to do that.
Yeah, tracking what you spend, it's easy to do. I remember watching my father on the kitchen table spread out all his monthly checks that he had written. The bank had sent them back to him, and he spread them out. He was balancing his checkbook. And I think sometimes it's easy in this technology world to kind of just look at your phone and see whether you have money or on your computer and not remember what future obligations are. So I think tracking what you're spending and being aware of what you're spending, you'll look at it and say, oh, gee, I never realized when you see Chick-fil-A, Chick-fil-A, Chick-fil-A. And we love Chick-fil-A, by the way.
Yes, big fan. Obviously a big fan.
But sometimes you're not aware of the repetitiveness of your spending things. So there are some apps out there or technology that our members can use to help track their spending.
Yeah, and so again, as another great point, punctual as well, because my father actually still does that too. And until the day that I moved out, and I had my own bank account, I guess, rather. I would have to do the checks and balances. I'd had to keep my little checkbook, make sure I marked everything, and I hated doing it. But again, you saw exactly where your money was going. But there are apps such as Mint, which again really help illustrate. And there's 100 different ones. I'm just using one as an example. But Mint, you can pop up a little pie chart. This is how much money you spend on insurance. This is how much money you spend on your mortgage and your debt obligations that you have to pay. And then it'll be like, this is how much money you spend on fast food. This is how much money you spend on entertainment, and so forth. So again, it's one app that does that. Online banking, most institutions have something in set, with bill pay, and GUCU certainly does as well, and it's a fantastic program. But there's things that you can do that way as well. You can even use Excel. I know that's another thing that works for people, because you can have things to auto-calculate. I think Excel is another one of those things, like online banking, that is one of the greatest things since sliced bread. But again, it's different for everyone. Similar to when we were talking about debt and credit and everything, paying those off is different. Same thing for your I guess your willingness to use other facets.
Sure. And check out Georgia United's digital online services. There's a lot of different calculators there and a lot of resources. We have a learning center with all kinds of financial articles and webinars that you can experience. So yeah, check out all the tools that you have available and then find one that fits you.
And those apps are free, correct?
Correct. They are free.
That's
I mean,
great.
Free, right?
That's important.
Yeah.
So, yeah, and I know Credit Karma has one.
Yes.
Mint, you mentioned Quicken, I believe. Those are industry leaders.
Mhm.
So, yeah, please check those out to help you with your budgeting. And of course, if you need further assistance, reach out to your branch personnel, or you can email us personally. Steve or Lee or Harrison or myself at bd@gucu.org. And we'll be happy to talk to you about financial wellness and financial literacy and things that we can help assist you in putting you in the best position forward. So now that we've talked about budgeting, and again, you can Google budget guidelines, and at 12 pages will come up on your computer. In the final discussion about budget guidelines, what are some of your tips and tricks and things that you can present to the people who are watching right now on how to set up that budget?
One thing that you can do, which also helps with your credit because it makes sure you pay your bills on time, is set up automatic payments as often as you can. Those bills are going to come every month, and go ahead and set those up for automatic payments. I have mine go to a Visa card because we've got a 25-day grace period where on most due that you can get it paid off. That way the bill's going to get paid on time, and then you can pay it off all at once. But doing pre-authorized transfers into your savings or into an account that's going to go towards your bill at the end of the month, it can be challenging if you get paid weekly or biweekly and your bills are just due once a month, like your car or your mortgage. You could actually have a portion of your pay go into another account that you title car or home, and then when the bill comes, the money's there.
I think that covered it.
There you go. Well, that's perfect advice. Thank you, Lee. All right, so let's, we've talked about debt, and we've talked about credit, and we've talked about, the ways that we can budget. Well, let's talk about saving. And again, for those who want retirement and investing advice, please go back to gucu.org on the investment tab, and our members' financial team will be happy to meet with you to take a snapshot. I've personally utilized them to review my retirement investments and gain some great knowledge, because there were things I was invested in that I had no idea what they actually were. I just was kind of taking the advice of others. So it was a great opportunity. And again, Kathy and John will be happy to sit down for free and talk to you about that. So let's talk about saving. All right. We're often told you should always pay yourself first. But Harrison, what does that mean?
Yeah, so paying yourself first exactly is, saving. We're in the savings discussion first. But after you look at your debt obligations and you pay off everything that absolutely has to, or not pay off, you pay on everything that absolutely has to be paid, you should, before doing any entertainment or before budgeting where you're going to go out and eat or what vacation you're going to do, you should set aside money into an account. Like the easiest example would just be a savings account, right? And that's going to look different for every single person, but it's better to have that account and a savings account, and you can have multiple different savings accounts. You can have one, again, we're going to talk about an emergency fund here in a little bit, you can have an emergency fund saving account for when those those unexpected life events come up, and that way you're not having to take out more loans and more credit cards to be able to pay on different things. But also a savings account just to be able to afford things. So if you're a child, that could be you want a new video game or you want a new pair of shoes. Well, how do you do that? You save. Okay. Same thing for an adult. As we get older, those items that we want do get more expensive. And so if you have that, you have goals set in place to where you can, achieve that. So, but yeah, long answer to a relatively simple question. Saving and paying yourself first is really, really important.
Piggyback on that, you're right. As far as like the emergency fund, we'll talk about it more, but 40% of the population does not have funds set aside to cover a $400 emergency. So I think making savings a habit is a really good idea, especially if you're doing pre-authorized transfers into a savings account, so you don't even miss the money. But it's a great way to get yourself situated. If you're not, then you are going to have to look at other means or debt or that kind of thing. And the credit union does make loans as low as $500. So if you just need tires for your truck to get to work, some of our member groups have told me they have people borrowing from their 401k for emergencies. And wouldn't that be great if you had those funds already set aside?
Yeah, that's a good point. We all have those life happens moments. We don't plan on running over a nail as we're going down the expressway. We don't plan on the water heater stop working. We don't plan on our children needing braces or whatever, maladies that come up. But those life happens, as we know. So the better we can put money away, and then we don't have to utilize debt, will be an opportunity to save yourself money and interest accrued. So let's talk a little bit about, setting money aside for emergency savings. This is a very low rate at presently for savings accounts. And it's like, well, my savings account aren't earning a lot of money. And again, that's tied into the Federal Reserve rate. When the Federal Reserve rate is zero and they're not charging interest, there's very little that financial institutions can pay in terms of interest. Back in the 1970s, when mortgages were 20% and car loans were 15%, well, yeah, you could pay 8% on a certificate of deposit, but that was because everything else was so expensive. Now, as the Fed raises rates, I'm sure the rate environment will improve for savings vehicles. But what are some of the things people should utilize to help maximize their savings?
Yeah, and I think no matter what vehicle you use to save, the important thing is just saving, right? And again, we talked a little bit, touching back on emergency savings, goodness, can't even talk, is that you do have something in place. So whether it's, an unexpected job loss, or maybe you get sick, or any of the things that you just mentioned, bad things sometimes happen to good people. And if you're not in a financial situation, you brought up the statistic there to where, 40% of people can't come up with $400 in a pinch. $400 may seem like $1 million to some people, but like it's a relatively low amount, and so it's important to start saving, obviously early and as soon as you can. But again, we can talk about it all day, as long as you have something set up in place. But you mentioned specific products, so whether it's a savings account, a money market account, which is a higher paying interest savings account, or a CD, anything like that, those are some of the vehicles that you can use to save.
You can comparison shop. As we mentioned, we're not for profit. We're owned by our members. So generally speaking, we're doing a little better in the area of rates because we want to give our members the benefit of us being not for profit. And another thing that's different is that we've got that checking account, unified checking.
Oh, yeah.
And it provides an opportunity for you to earn interest if you meet certain guidelines. So go to our website, gucu.org, and find out more about our interest-bearing checking.
Yeah. So that account's fantastic because again, it's free, right? It doesn't cost you. How many checking accounts do you know that even pay interest? Let alone a rate like that. And so it's fantastic. And we also have things set in place for children as well, or for youths, I guess. And I'll let you talk about that because I know it's a soft spot for you as well. But we have something called a Money Mammals account and a Money Masters account. And basically, up to the age of 18, as soon as you turn 18, you can have regular account and everything. But we pay for A's and we pay for community service. But I know that's your passion, so I'll let you talk a little bit about that.
Love our youth accounts. I don't think anyone has anything like it.
Yeah.
And as we were mentioning about Dad sitting at the table with all the bills spread around, we're raised not to talk about money. It's rude to ask people how much they make or that kind of thing. But during life, there's teachable moments. So if you're going through something, your kids are going to also grow up and go through the same thing. So when you do have that water heater that breaks, I mean, you all need to talk about it. Don't be sneaky about money, or don't be whispering. That makes kids fearful. Talk about, here's our options. We've got this repair. Do I take it out of my savings? Do I put it on a Visa card? How am I going to pay that? And then with our youth programs, the Money Mammals and Money Masters, again, go to the website under savings, youth programs, and you can get the details on these programs. But Money Mammals teaches kids to play. So there's games, digital games. There's 4 apps you can download. They're fun, interactive games. There's one with wants versus needs. They're comparative shopping, how to use coupons. But they're fun games. So if they're going to be on their computer or on your phone anyway, let them play something that they're going to learn from. And then in the Money Masters, as Harrison mentioned, we provide incentives for doing the right thing with your education and with community service. With your education, you do pay for A's. It goes right in the savings account. And with community service, again, it goes right in the savings account each semester. And with that, we match it to children's health care. So you're saving, you're helping the community, and you're helping sick kids. One other thing on those youth accounts is that I tell people the whole world is telling your kids, like, spend wisely. Here's how you spend wisely. But if you don't teach them to save, nobody is going to hear it. If they don't hear it from you, because the marketers are not doing that. The ads on YouTube is not telling them to save. So they really need to hear that from you, that when you save. And savings is a good thing. It's a gift you give yourself. It's not money you're giving away. That's called spending. Savings is money that you give yourself.
And the youths are one of the largest target audiences for a lot of these products and services nowadays anyways.
Big consumers.
Yeah, and so if they're not being taught at home or from their institution, where are they going to learn those habits? And the answer is nowhere. And so it's really, really important, and we talked about it a little bit earlier, about building good saving habits. And the same could be said with spending habits. I think those kind of go hand in hand. But if they start at an early age, it becomes a lot easier when they get older. Because again, saving for something that costs $50 is, as a kid is, going to slowly transition on up to maybe saving up for something $5,000 for like a used vehicles are so expensive now. But maybe it was like a used vehicle that you're saving up for or whatever. Or maybe it's student loans. They want to be able to help or pay off their education, something like that. And so they're saving up $20,000, $50,000, whatever that number may be. But if they don't start those habits at a younger age, it becomes progressively more difficult. Because if you were to go to somebody, and I have something written down here that I always love sharing anytime we do any type of financial counseling or something similar to this webinar today, if you start at the age of 22 and save $35 a month, by the time you were 67, you will have $1 million in a savings account, or in an account, assuming a 10% rate, right? Or 10% interest. And that's pretty, average, I would say. That's not a crazy amount, like 10% gain over that amount of time. If you were to do that same exact saving method, but start whenever you're age 40, you have to save $608 a month for the same result. So you're going to have $1 million at 67, but just by starting those few years later, you have to save 17 times the amount for the exact same result. So again, if we can instill these great habits with our children or with the youth, whether you have children or not, if there's someone that's in your life or that that has one, it's huge and it's important, and it sets them up for success and not failure.
Yeah, and I know, especially with children today, setting a budget there's lots of opportunities for when they play video games, in-app purchases, in-game purchases. And if you say, okay, you get $10 a month, they understand that's a budget. You're budgeting them, and that's an important thing. Another thing we offer here at Georgia United, before we move on to some questions that have come in just recently, we offer a Christmas Club account. And people love this account because they can squirrel away money throughout the year. And then when the holidays approach, they've already put money away to pay for their holiday gifts. And then they can utilize that money. So again, that's just something that we offer. It's just a regular, a savings account that's kind of locked up until that year. So let's talk about some of these questions that have recently come in. Sometimes in life, people either don't have credit or they need to repair their credit. So Lee, what advice can you give to someone about either establishing credit if you haven't had credit before or repairing credit?
That's a great question. Like I said, we do run into folks that have had, credit bumps for whatever reason, or those that are just building credit. We also talked about the need for going into debt because if you don't get credit at some point when you want the big purchase, it's not going to be available. One of the great ways to build credit is with a shared secured loan. At the credit union, you can use your savings as collateral for a loan, and then we lend you that money back. And then as you pay your monthly payment, you're actually building your credit. So it's a great way to build it or to repair it. And we also have the shared secured Visa card that you can use cash collateral, and then you're going to pay it back, use it, pay it back. And again, you're building your credit. And then after you've had it for a certain amount of time, you may switch it over to a non-secured card and work on your credit limit. So that utilization factor, that 30% of your credit score, like we talked about, will be there.
Yeah, and that's something that we see a lot of. Well, and I would say most of the communities that we serve is the secured card is what a lot of people tend to go towards. And an example of something like that would be, I have $500 in cash, and I bring it to the bank, and I say, hey, or the credit union, and I want to have a $500 spending limit on this card. Okay, well, that $500 is the collateral. So we talked about that relationship between a child and a parent earlier. If you go over that, or you don't pay back that $500, you miss those bills, we're not out anything. And so that's again the kind of where we come in and are not allowed, but we make that happen. But it's a great product that most institutions have. And
the other thing to take into account too is a lot of folks' first credit is like a store card or a department store card, and those tend to have really high limits, over 20, maybe even 27%. At Georgia United, we offer Visa cards, and that Visa is a national revolving charge card. And I have seen on people's credit reports that their credit score would be better if they had the national revolving charge rather than the Macy's and the Gap and the Kohl's and all that. So I know they'll offer you 10% if you get their charge card, but if you would focus on looking at credit cards that have a lower interest rate, like the Visa versus the department store card, you may come better off financially.
Yeah, and that's a very good point too, is because, we oftentimes get credit cards at an early age, and then we just stick them in our wallets, and we never actively shop them against what's out in the marketplace. And by, again, paying those high interest rates on a department store card, we've seen a lot of people in the branches where they brought in their debt with these high rate cards, and then we've been able to consolidate that on one of our cards at a much lower interest rate. And that's a good point. So you should always actively shop what you have in the financial services. It's just kind of one of those things that we just put them in our wallet and forget about it. So that's great advice.
Yeah, and it changes so much too. So I mean, it is kind of like insurance, how you're always actively looking. It's the same thing.
Right, and we're talking about balance transfers too. Transfer it from a higher balance to Georgia United to get a lower balance. And Georgia United does not have balance transfer fees, whereas out there in the marketplace, normally there's balance transfer fees up to like 3%. So if they offer you 0 on a balance transfer, but they're going to charge you 3% up front, then maybe you didn't save as much money as you thought. But there are no balance transfer fees at Georgia United.
And actually, I've seen them as high as 5% on the balance transfer fees recently. And so, you think about if you're transferring $10,000, that's an additional $500 that you have to pay off the top. So that's, that's good information that's not something we do here. So again, just, we're here to help you and serve you in any way. One of the things we talk about is freezing credit. It's exactly when you freeze your credit. Why would we freeze our credit? What benefit does it have? And then how do you unfreeze your credit? Take us through the steps of the whole credit freezing.
Sure, it really is a great thing. We need to talk about protecting yourself from identity theft. And of course, that don't carry your social security card in your wallet, and don't put your passwords in your wallet. But one of the best ways to protect yourself is by freezing your credit. You must do it with all 3 credit bureaus. And then should the time come that you want to apply for credit, for instance, at Georgia United, if you want a car loan, we'll pull Experian. So you only have to unfreeze Experian. You have to keep up with your password. That's hard for people. Keep up with your password, and then it'll be open for like 48 to 72 hours, and then the freeze goes back on. And in Georgia right now, it is free to freeze your credit. So we really recommend that because it's the best way to protect yourself from identity theft.
Yeah, and to unfreeze it doesn't cost you anything either way.
And it is important that you remember your passwords.
Yeah.
That's a toughie because I've had people freeze their credit and then they come in to get a loan and sure they can't find that password and they have to go through a password retrieval process. Remember, there's 3 credit bureaus, so you're really getting yourself in a bind.
I think Notes app on most smartphones is a great way to do it because most time you have a passcode and you can have those even password protected as well. And without sharing too much there, it's a great resource to have. And again, most phones I would say made in the last 15 years have that. So.
And I will speak from experience that I too could not remember a password.
Yeah.
I was trying to do a car loan and I couldn't log in because I didn't have a password and I asked for a manual password, but that would come in the mail and that would be like 5 to 7 business days down the line. And if you are trying to apply for credit, you don't have 5 to 7 days, whether you're doing a credit card or a car loan or a mortgage application. So it's very imperative that you keep those passcodes available to you and learn from me. I have no problem in saying I make mistakes just like everybody else. So learn from my things. We've had a lot of questions in the chat about student loans. I know it's been helpful recently with the no interest being applied to the student loans. Let's talk briefly about what Georgia United offers in terms of student loans.
Sure. Georgia United offers both student loans and student loan refinances. So if you are back in the repay mode, you might want to consider refinancing them with Georgia United and lower the rates. Even if interest is not being applied now, though, just getting that debt out from under you might really help you. There's no rule against paying for it, even though it's not accumulating interest. I mean, eventually you want it to be gone, so you don't have to put off those big purchases like homes and cars.
Well, that's good to know. I mean, that's important information, and it's always helpful to have that in your knowledge bucket as you move forward in your financial journey. But one of the things I want to talk about is sometimes I'll see signs on the side of the road that say, they're little like yard signs that say, credit repair clinic, call this number. Or I'll see television commercials. In debt, we'll negotiate for pennies on the dollar your debt. Are these legitimate places that we should consider helping us to get out of debt?
You may be looking for some help with your debt. They may not necessarily help you. Even if someone settles your debt, it's still going to show on the credit report that it was settled, not paid for the full amount. So I would say, number one, if you're in a bind and you want to start paying things off, first of all, call the creditor. Go directly to that creditor, because once they turn it over to collection agency, you lose that relationship. There's nothing that they can do for you, and the collection agencies aren't always as kind about it. So don't avoid speaking to them.
Yeah, and I would just shadow the exact same thing that you just said. It's always better to call your creditor than to have them call you, because a lot of time, again, we mentioned it earlier, but we understand sometimes bad things can happen to good people. And so it's always super important to reach out to them first, because again, that is where that money is tied up. But two, again, like after all that stuff's worked back out, and I'm going to kind of transition back, talk a little bit about savings again. Sometimes whenever someone's just coming out of a scenario like that, to where they're massively in debt and they're trying to be financially responsible and start saving and paying themselves first and have an emergency fund. Because again, it's kind of like a domino effect. Sometimes if you don't have that in place, that's what starts this, right? But we get asked all the time, where do I start? I don't seem to have any money whatsoever. I'm living paycheck to paycheck, and that's what. And again, you hear this all the time. But just similar, today we're talking about financial fitness boot camp, right? Getting it kicked off, and what is it that we can do? If you were to do a physical fitness boot camp, and you're like, hey, my goal is by the end of the year, I want to run a marathon. Day 2, are you going out and you running 26 miles? No, I'm sure not running 22 or 26 miles. I'm not running probably 5 or 2 miles that day. Okay, the same can be said true. Same can be true with savings. Like, you're not going to go out and accomplish exactly what it is that you say. A year from now, what your target goal is. You're going to see what works for you now. And the more that you get closer to paying those debts off, and you're in a little bit healthier situation financially, you're able to save a little bit more, and you're able to put yourself in a better position. But that was one thing that I wanted to talk about before we move move forward here because that is something that we get asked a lot. And it could be going back to something as simple as identifying a spending leak. So if you're hungry and you go grocery shopping when you're hungry and you buy more stuff than sometimes I like to think that I'm David Ramsey when I'm hungry and I decide to go to Kroger. And it turns out that is not the fact. So I buy a lot of food that ends up going to waste. So it could be something as simple as that as well, just assessing where you're at, know what you owe, and where you can go. But resources-wise, so you mentioned the road sign. Aside from like going to whoever your creditors are, you can always go to us, and we would be more than happy. Again, it's free to help you out with whatever it is and answer any questions that you may have.
Yeah, I was going to mention too, like, where do I start?
Yeah.
You get so overwhelmed. So we can't say know what you owe enough because a lot of people don't know what they owe. They don't know what the interest rates are. So you need to do that. But one of the things that just occurred to me was one of the flexible payment options that we offer you if you have an installment loan or a car loan with us is if you get paid biweekly or if you get paid on the 15th and 30th, you can set up your loan to come out on those paydays. We'll even offer you a weekly option. It's real hard when you get paid weekly to make sure that you're going to have that money when something's due at the end of the month. But we have flexible loan terms where you can pay in line with your pay cycle. And that's what we want you to be thinking of, your pay cycle. When is the money coming in and what is it going to go towards before you go out and blow it all on your Chick-fil-A or your date night out? Where's that money going to go towards? So if you could do these automatic payments with your consumer loans, that would be a real help.
And goal setting is an important part of that nexus. And Harrison, I'll use you as an example. So if you're spending $100 a month on Chick-fil-A, maybe set a goal that I'm going to spend $50 in the next month and then apply that $50 to something else, which is maybe your debt repayment, baby steps. Find out what works for you. Don't take big swings and misses. Start out by adding $10, $15, $20 to your monthly payments. And see if it works for you and you can get through the next month. And then maybe increase it a little bit going forward from there. So now I know.
Yeah, and I was going to say, and we talk a little bit about, or most of the time we have the discussion talking about SMART goals, the acronym SMART. And I know you typically like bringing that up, so if you want to do that, you can. But I think the biggest thing that you just mentioned there is make sure it's realistic. Again, just like I'm not going to run a marathon on day 2, I'm not going to run a marathon period this year. But just like I'm not going to do that on day 2 of setting that goal, you don't want to set unrealistic expectations for what it is, because then you're setting yourself up for failure, and then you typically don't follow through with those plans as well.
Yeah, goal setting is kind of part of maturity. So again, back to the youth programs. When kids are younger, their goals will be smaller, and also consequences are smaller if they don't meet their goal. But you should practice those SMART goals, which would be specific, measurable, attainable, and realistic. So if a teenager wants to buy a birthday present for their mother, and their birthday's in a month, and it's going to cost $15, they'll know they need to get $5 a week. And how could they make that money? So they can actually see where they're going with it. And then as you get older, it gets a little more complicated. The consequences are larger, but also the rewards are larger as well by setting goals and working towards them.
Great. That's great. Those time-bound goals and you're setting a schedule really help. And honestly, I've been in situations in debt where I've had to set goals and give myself a timeline. And it's an amazing feeling when you become that financially independent person you are. So I know we touched on a lot of topics, and I want to give you each a final chance to say things and touch on anything you want to let our viewers hear about. I just want to remind everybody that you can, again, either reach out to the branch or if you have a specific question, please email us at bd@gucu.org, and one of the team will be happy to reach out to you. I routinely get questions, from people, hey, I was in a financial wellness seminar you did 3 years ago in Augusta. We're now looking to buy a car. Can you help us? Please know that we're here for you and we'll always be here for you. And if it's nothing more than pointing you in the right direction, that's what we do here at Georgia United. So Harrison, I'll go to you first, and then we'll have Lee close us out.
Yeah. So once again, my name is Harrison Stafford. The counties really that I do are Paulding, Catoosa, Bartow County, Whitfield County, Murray County, Walker County, Gordon County, and there may be one other ones. But again, the easiest way to think about it is where Kennesaw is up to Tennessee. My email is Harrison, Harrison, .stafford@gucu.org. And so if there's any questions that you have for me specifically, if you'd like for me to sit down and talk with you, whatever it is, I'd be more than happy to do that. And thank you once again for stopping by and listening to us talk. So.
And I'm Lee Gant. I'm sure Steve will put our emails in the chat, but we're available to help all of our members, even if you just want to kind of run something by us. We also connect you with people that can help you. So I would say in closing, this time of year, it's a great time to take stock of your finances and think about those things that are keeping you up at night, those things that are hanging over your head. They cause you a lot of stress. Stress is not healthy. So if you want to be physically healthy and financially healthy, get rid of some of that stress. Take those things that are hanging over your head and bring them to the credit union. Let us help you get rid of that stress. And we love having relationships with our members. So, you start with a savings with us, get your checking account with us. Find out how you enjoy our free checking. And then when it's time for a car loan, come back to your credit union because you can be sure that we're always going to be on your side. People helping people. We're not going to put you in a bad spot, but we're going to help you be realistic and we're going to help you. So we love having relationships with our members.
And I don't think I mentioned Whitfield County, but if I did, I'll say it again, Whitfield County. But regardless of where you're at, reach out to any of us here on the BD team and we'll be more than happy to help.
Well, thank you both. We appreciate your time. In 1958, a group of 7 educators each put $5 in a cigar box to form the credit union that became Georgia United. Throughout our mission, we have never forgotten the importance of educating our members and potential members about financial education and financial wellness. With 63% of all employees suffering financial stress during the past year, we want to recommit our goal to you to help you and find out where you're at and assist you in any way possible. On behalf of Debbie Smith, our CEO, we thank you for joining us today, and we hope to see you down the line. And have a great day, everybody.
Thank you.